Trump has announced tariffs on all countries and the markets are dumping. So in this video we'll go over what could follow next and how we should position ourselves accordingly. If you're enjoying the content, don't forget to give this video a thumbs up and make sure to subscribe to the channel so you never miss out on future updates like this. Now let's get into it. So on Friday, Trump has announced tariffs on all countries and has shared his plan to impose them over the next few weeks. And because of this, the markets have dumped and we've seen a major correction in the S&P 500 by being down 6% for the day, the Nasdaq 6% for the day as well, and the IWM actually being down around 4.5%. Now we see that Nasdaq has entered bear market territories by being down 22% from the highs in mid-February, and the IWM also entering bear market territory by being down 27% from the top in November. The S&P 500 still hasn't entered bear market territories as it is down 17%. So because of this, a lot of people have been panicking as we've seen the fear and greed index reaching single digits levels, which is something very rare and generally confirms macro bottoms. Now the tariff narrative also seems to be priced in with all-time high searches for them and everyone panicking about the potential implications that they may have for the economy. Now of course they will be extremely important moving forward on the long term, as I'll highlight in my upcoming video. But on the midterm, I think that this narrative seems to be priced in and everybody seems to be discussing this idea that Trump is using these tariffs to crash the markets, to force the Fed to cut their rates and stimulate the economy once again, which is a crazy concept. A lot of people seem to be agreeing that this is the cause. Now, I personally don't agree with that, and as I'll highlight in my upcoming video, I think there are different reasons for why this is currently happening. But now, I want us to focus on what's going to happen next with the S&P 500 on a midterm basis. Now moving to the charts, we see that the S&P 500 is extremely oversold both on the low time frames as well as on the high time frame basis, as the weekly RSI has reached levels that have been seen only 3 times in the past 2 decades. So the first time was in October of 2008 while the financial crisis was going on. The second time was in March of 2020 when we had the pandemic crash. And now we have reached below oversold levels once again with this whole tariff fears and recession fears. So I think that on the short term, the S&P 500 is extremely oversold and that it is very likely that we're due for a big bounce. Now, since stocks have been dumping so much and since we have broken through so many support levels, I think it's safe to say that it's likely that we have topped out for this cycle in the equity markets, meaning that the next rally should bring us to a macro lower high and then to start off a complacency zone in which everyone screams for higher, in which there is a lot of euphoria, and in which there is a midterm risk on environment in the markets. Now this will be extremely important as I believe it will have a deep impact on the correlation with Bitcoin as well, as we'll cover in a few minutes. But I think that this will precede the actual bear market downtrend and this dump lower. A lot of people seem to be considering the idea to take protective shorts at these levels, as we've seen the VIX jumping over 50% yesterday, as everyone's hedging for further downside momentum, meaning that the local bottom is very close to being in. Now once we'll reach these levels, however, that's when I'll consider building macro short positions in order to hedge myself for this potential downtrend. So moving forward, I think that on the short term, the markets are close to bottoming out. I think the tariff narrative is mostly priced in. And as we've seen the fear and greed index reaching single digits levels, I think this gives us a good opportunity to entry stocks in which we have high conviction and gradually build spot positions that we could or not hedge once we'll reach these levels. So these are my thoughts on the midterm moving forward on the S&P 500. So now let's see how will this impact Bitcoin. Now over the last couple of days we've seen something really interesting, which is Bitcoin actually seems like it has decoupled from the stock market. So while we've seen this major crash in equities, Bitcoin has held relatively strong over the last couple of days. signaling a lot of relative strength that a lot of people seem to be talking about right now. And so I wouldn't exclude the possibility in which Bitcoin forms yet another lower low before the long-awaited reversal, due to the fact that so many people are excited and hyped because Bitcoin has held so strong over the last couple of days. But on a midterm basis, I think this has a real impact on how the two are going to perform moving forward. So as I mentioned earlier, I believe that the S&P 500 from here will form a macro lower high, then leading into a complacency zone that will coincide with a midterm risk on environment in which investors are really confident in the markets that they'll move on even higher. And this phase will precede the next leg down. But since this will lead to a midterm risk on environment, I think it will be extremely bullish for risk assets. And since there is so much relative strength on Bitcoin right now, I think that this will eventually lead to a higher high in Bitcoin, then followed by this distribution range, then the next leg down, and the actual bear market that everyone's currently panicking over. So I think that given this relative strength, Bitcoin will manage to form a higher high even with the S&P 500 and traditional equities forming a macro lower high. So this is my current stance on how this correlation between Bitcoin and the S&P 500 will move on from here. So now let's see how the low time frames are looking for Bitcoin and how we can position ourselves accordingly. So moving to the Bitcoin chart, I see two main scenarios that could play out moving on from here. The first one, which is actually my base case, is that we're currently in this bottoming formation at these levels, which precedes the next leg up. Now, we need to wait for an extended break of structure in order to confirm that the trend has shifted and that Bitcoin is forming higher highs. As I've said previously in some of my prior updates, Bitcoin has failed to form even a single higher high throughout all of this downtrend. And when eventually Bitcoin will manage to break above the prior breakdown point, which is currently this one, at $88.8 thousand, then the trend will shift, and this would act as a bullish confirmation that we are entering our long-awaited reversal to the upside. Now, what's key to track is whether this support level at the 0.618 Fibonacci retracement level holds. I would like this level to hold in order for this bullish thesis to remain intact. If this support level fails to hold, however, I think it's likely that we'll have a full liquidation cascade, similar to what we've seen in the prior flushes, in which Bitcoin forms a lower low and sweeps all of the untapped lows. This has been my thesis for many days now. When we were at these levels, I highlighted the possibility of a liquidation cascade, which would form a lower low. Now, since so many people are feeling somewhat fearful, I think the most likely outcome moving on from here is the bullish one, in which Bitcoin has actually bottomed at this support range and we'll see a move to the upside soon without triggering the last two of these untapped lows and actually shifting the market structure by forming a higher low. For the first time throughout this downtrend, Bitcoin would manage to form a higher low, and with an extended break of structure above the prior breakdown point, it would act as a confirmation that the trend has shifted. Else, if this support level fails to hold, as I said earlier, I think it's likely that we'll see a full liquidation cascade, sweeping the lows at $76.6 thousand. And it, from an Elliott wave standpoint, I think it would also coincide with a last corrective wave 5 and last corrective wave C out of this wave 5. So it would certainly make a whole lot of sense to see Bitcoin bottoming out in this high time frame demand range before our long-awaited reversal. But of course, this scenario would only play out if the 0.618 level would fail to hold. Now, as I wrote in one of my latest threads on X, I think that this whole downtrend, this whole environment of fear and anxiety and frustration, it's leading up to essentially a short-term pain for long-term gain type of scenario, in which this whole downtrend represents actually the short-term pain. And we see this because throughout this downtrend, there has been an interesting pattern that has developed each time, which preceded the flush. And that is a series of untapped lows that develop on the lower time frames that then lead up to this crash as Trump announced his tariffs. And we've seen this over and over again playing out back in late January, back in late February, back in early March, and in current times. Each of these flushes, each of these liquidation cascades has been preceded by a series of untapped lows that has developed on the lower time frames. And I know I covered this thesis quite a lot over the last couple of days, but I do think that this is what has led up to all of these corrections. And this is also why I'm feeling bullish moving forward, as I believe that market makers are using these times to make everyone flip bearish right at the lows, right after they manage to accumulate by triggering all of these stop losses throughout these liquidation cascades. So this has been my thesis over the last couple of days, and I believe that this will eventually lead up to the next leg up that we've covered earlier in this video. So with that being said, to wrap things up, I believe that it will be worth tracking Bitcoin in the coming days to see a clear directional move from this range. I'll keep you the guys updated once there are further developments to this setup. If you enjoy shorter market updates like this, let me know down in the comments. And thank you all for watching, and I'll see you guys in the next one.